it's a great topic, and it's fun to bring in something that's sort of tension in the business. And we've got folks up on the panel here who can actually talk to the different trends that go to how do you work something in payments, we're making sure that it is also meets all the other standards one would expect from it. So I'm not going to go any further into that because Brian Tate, who's going to the head of the president and CEO, did I get that right?
Today I am, yes.
Today, of IPA, which is the Interactive Payments Association. This came together, Brian's idea. He wanted it to be dynamic, so let's make the dynamism happen. And we'll turn it over to Brian to moderate and do the intros of everyone.
Well, thank you, David. Thank you, everyone, for being here this evening. I do want to thank NIPAY for helping me put this together, and I definitely want to thank Judy Reinierson with K&L Gates. They are a member of our association, and Judy has never failed to pitch in or help out whenever we ask her, so we are very appreciative of the fact that we're all here this afternoon or this evening at K&L Gates. I'm Brian Tate. I'm the president and CEO of the Innovative Payments Association. We are a trade group in town in Washington, D.C. that represents primarily the prepaid industry, but a lot of our members are increasingly in the fintech space. We have the major networks as members, big issuers, small issuers, program managers, processors, and we like to think that we represent about 80 to 85% of the prepaid space. And so we try to help our members with comment letters and engaging with Congress and regulators and the media. But we care very deeply about this rule. We have our own issues with it, but we have been engaging with the Consumer Financial Protection Bureau for about 8 years now. And through all the different versions, Judy has been there. And I do have a board member. I do want to make sure I highlight who's here, John Hagee. And there are some others who we work with in the room. And so we hope to have a fabulous discussion. And we think this discussion goes way beyond just prepaid accounts. It goes into where payments in general are going and how they're going to be regulated. So I will allow my great panelists to introduce themselves, and then we'll get started.
Thank you. So I'm Deb Baxley, and
You hit the tab there for one.
okay, yes, Deb Baxley, and I have over 25 years experience consulting, strategy and technology consulting in the area of payments. First with IBM, then Capgemini, and since 4 years ago with my business partner David True, our current company Pagility Advisors, which is a consultancy, and I'm also a co-founder of NIPAY. And I've done a lot of work with mobile wallets in industry groups such as the U.S. Payments Forum. So tonight, we couldn't get PayPal to come be on the panel since they're in the middle of a lawsuit. So I'm going to pretend like I'm PayPal and take their point of view.
Great. Hi. Thanks for having me. My name's Eric Goldberg. I'm a partner at Ackerman, a law firm in Washington, D.C. I represent mobile wallet providers, prepaid issuers, program managers. Before that, I spent about 7 years at the CFPB, where I was managing counsel for the Bureau's payments regulations and worked, among other things, on the Bureau's prepaid rules. So since the CFPB wouldn't come here because they're involved in a lawsuit, I think I'm going to be doing
Hi, my name is Moshe Golan. I'm the founder CEO of Praxo. Praxo is in fintech before they called it this name. We're 20 years old. We started using money in gift cards 20 years ago and moved into program management of prepaid cards 12 years ago, and been issuing program manager for that period of time. I've seen the evolution of the regulatory environment and the consumer reaction and the program managers' reactions to it. So very interesting. The subject matter is very interesting. Even though I'm not a regulatory expert, I'm definitely on the receiving side of that.
Well, at some point, please feel free to ask questions. Please tell us we're wrong or you have a completely different point of view. We want this to be interactive, and we want this to be something that educates everyone, and we all walk out of here learning something we didn't know walking in. So I will toss the first question to Eric, since we seem to have a traveling roadshow that we do. And Eric and I first met when he was at the Bureau and I was here. And now that he's left the Bureau, we've pretended to become more friendly. And I do appreciate him taking the time to join us all the way from DC. So I'll throw it to Eric. Eric, if you could just share with us, and I always want to clarify this, it's not the prepaid card rule, it's the prepaid account rule. And so what products does the rule cover?
Sure. So I'll step back a little bit. The Bureau, folks who aren't super familiar with what the Bureau did, and a year ago, April, a new rule went into effect that governs what, as Brian said, prepaid accounts. Previously, things that are covered by the prepaid account rule were not always covered by regulation needs, subject to error resolution, account opening disclosures, and other things. So the Bureau went through a very long process, as Brian noted, to bring these things under the coverage of the rule, and it does not, which is the reason why we're here, cover just what people think of when they think of prepaid. So it does cover GPR cards and other sorts of prepaid cards, but also covers a lot of other things. So it covers payroll cards, which were partially covered by Reg E before. It covers mobile wallets that can store funds. It covers certain refund cards. It covers really anything that is marketed or labeled as a prepaid card or that has certain features of a prepaid card that's not otherwise a traditional bank account. And you might ask yourself, what's the line between those two things? And we'll get into that a little bit further. But the line is not that black and white.
And one point I forgot to mention, which I will, is there, if you introduce an acronym without saying what the acronym stands for, you get penalized.
I don't even know what acronym is. GPR, sorry, is a general purpose reloadable prepaid card.
Well,
So,
we all know.
so if you go to the
What
CVS,
everybody does.
if you go to the CVS, you see your prepaid card
What's
on the
CVS
rack.
they have work?
Consumer values.
I have no idea what secret
Is it really? I will not use any more acronyms tonight. But if you go and you see the card on the rack, the J-hook, which I don't think is technically an acronym, that's a GPR that you can use to load funds, use it for purchases, but that's not the only thing covered by the prepaid card. If you only get a card online and use it digitally, load it into your Apple Wallet, that's also
But
great.
it's distinguished from a card that's tied to a certain store, like an Amazon.
Yeah, so a gift card and Amazon's sort of a separate conversation. But yeah, like your Starbucks card is not subject to the rule because it's not widely used at an array of merchants.
Well, do we want to talk about the kind of different products that are in the market, open loop or closed loop or anything like that?
Sure. So one of the distinctions the rule makes is right there between the closed loop, which is a traditional gift card, so your Outback Steakhouse card or your Starbucks card, and then open loop is things that can be used anywhere, and then somewhere in the middle are sort of these mall gift cards that can be used at a smaller subset of merchants. And the line there can be a little bit gray. Those things are generally outside this rule and might be covered under some state law issues. That's one of the key distinctions here, that if your card can be used either for person-to-person transfers or at widely available merchant networks, then it's subject to the Bureau's prepaid account rule.
Well, I'm going to throw this out to Eric and anyone else up here who would like to tackle this. And this is I guess, should mobile wallets and prepaid accounts be regulated in the same fashion? I mean, just to throw it out there as at the start in terms of the rule does kind of have an expansive definition from where they started in 2012, where the ANPR was, the advance notice of proposed rulemaking, was, I believe, about 25 pages long, and then the proposed rule 2 years later was 780 pages.
We got paid by the word.
And then the final rule is over 1,600 with amendments, and so they started here and then went here, and so throughout that process, it looks like they've expanded the definition of what is and what is not prepaid.
PayPal would argue that there's no evidence that people use digital wallets that store value in the same way they use a prepaid card. And so one of their arguments is called category error. But in the actual lawsuit, they're arguing about very specific things in the rule. And so saying that it shouldn't apply to digital wallets is not actually part of the lawsuit.
So if I guess in the rule, they do talk about intent, I believe, in terms of what is the intent of the product. So if your intent is to create, I guess, an account for somebody that's not a traditional bank account, how should that be regulated then? If you don't fall under another rule, it looks like the Bureau attempted to try to bring in many different products under one heading. And I'll throw it to Moshe. What are your thoughts about that, about the expansiveness of the rule and what products it covers, and why do you think the Bureau went in that direction?
So I don't know why they went this direction, but but to me, it's a stored value account that as you used to call it, a stored value account, and whether it's delivered, whatever the access mechanism, if it's prepaid account or digital or whatever, for us it's just a form factor. So I wouldn't know why they defined the line around prepaid and not expanded. So if it's a digital bank account, and whatever is allowed to be in digital bank account, it should be applied to prepaid. It's the same thing. The card itself is an access device, has nothing to do with it's not unique. It's a unique use case because you're accessing a different bin, but it's from our perspective, it's a digital bank account, and you can see in the evolution in the last 20 years. It started from those closed loop accounts and moved into bank kind of regulated instruments, and now the bank challenging bank, which is all the same kind of technology, same principles, same type of utility. So from our perspective, it's all the same. I don't understand why did they draw the line between prepaid and, for example, challenger banks and not under this regulation. So from my perspective, you should not have the rule itself. It should just be a bank account.
But does the rule itself draw the lines for challenger banks and maybe some other products like some of the, I guess, fintech debit or DDA accounts that are right across the line?
Well, I think it's important to keep in mind that when the Bureau was doing the prepaid rule, it wasn't writing on a blank slate. So there was a very expansive existing set of rules for demand deposit accounts, checking accounts, existing bank accounts, and there was nothing, arguably, get into that. There was nothing really comparable for prepaid cards. For mobile wallets didn't really exist besides PayPal and a few others at the time. And the idea at the Bureau was, well, the Bureau, over time since Reg E was created in the late 70s, the Federal Reserve, which was the predecessor of the Bureau in this area, would every few years do a new rule to bring in a new type of product. So whether it's non-need tested government benefit cards or payroll cards, and each time is saying, well, we're not reaching this next product. But consumers are out there using their prepaid card much like they were using any of these other cards. So we thought all the better to give everything the protections, because consumers may not understand the difference between these different types of products, and make sure we're expansive so we're not back here in 4 or 5 years when there's a new product coming out that's not covered by the rule, and make sure the rule covers all the things that are out there so consumers are getting all of those same protections. But we weren't, part of the issue is we weren't at the same time rewriting the rules for existing deposit accounts. So there's now 2 sets of rules, which is somewhat, I think, one of the issues that PayPal is concerned with, so much in their lawsuit, but one of the things that's apparent is there's one set of rules for the challenger banks, which can do overdraft and don't have to give the same sets of disclosures, versus the prepaid issuers, the mobile wallet providers, that are subject to the rule, can't do overdraft except in very narrow circumstances, have to give a different set of disclosures. Sort of an unfortunate way that the history kind of evolved.
Well, this leads me to my next question, which is there any, what is checklist checking? Does the rule define that? Is that in the rule? Do they, there is language in there about sometimes you just offering checks with your checking account doesn't make you a checking account. And it seems like it's not clear where the actual line is. There's a lot of gray area there. Outside the listed, I guess, clearly listed.
So I would think checklist checking is clearly outside the rule. I think, obviously there's prepaid cards where you can issue a check, and just because your prepaid account, like a Bluebird account or something, allows you to write checks doesn't bounce you out of the rule. I think each product, you sort of got to look at unique, it's got each product has different characteristics, but if you're marketing it as a traditional bank account, it's generally going to be outside the 4 corners of the rule.
So if I'm going to ask Deb as the stand-in for PayPal, well, what is the objection then?
Yeah, I'll
show you. That troubles them about the application of the rule?
This is the main thing you're objecting to. You can't read this, but it looks like
I certainly can't read it.
It looks like the box you have on your credit card statement.
It's
called the Schumer box. This is the prepaid box. So it has these different things. It says, what's the monthly fee? What's the purchase fee? ATM withdrawal fee, cash reload, and all these other things. Customer service fee. And on this one, and the one for Venmo, everything on here is 0 because they don't charge any of these fees except for electronic withdrawal. So if you take money out of your PayPal or your Venmo and you get it instantly, they charge you 1%. Otherwise, it's free. And they have an international transaction fee. So what they're claiming is, this is ridiculous because why are we listing all these fees as 0? None of these apply to PayPal or Venmo, and it's just causing consumer confusion. So some examples of the complaints that consumers got submitted. It seems like there's a fee for any way you want to use. I don't understand why you have this new rule. Why do we have all these terms and conditions for a small amount of money in my PayPal account? So that was the consumer reaction. And so PayPal has 5 complaints in the lawsuit. It says it exceeds the Bureau's authority to mandate clauses. Under the Electronic Funds Transactions Act, which is also known as Reg E, they should supply model clauses for optional use. In this case, they mandated the clause. You could put some explanation, but still you have to say.
Just put that into English for a guy like me. They're saying they're being told by the rule,
Dictate.
exactly how they have to disclose the
Yes.
information.
Yes.
And they prefer to disclose the information in their own manner.
Yeah, I mean, they don't want to list fees that are not applicable.
Okay, we just.
You can't stick your PayPal account at ATM.
Well, that's what I'm trying to get at.
So just to give a little context to everyone who may not be following us as closely as we are, the rule requires 3 disclosures. It requires a short form, a long form, and then your traditional terms and conditions. I believe pre-acquisition. So before somebody starts to use the product, you're supposed to find a way to get them all these different disclosures. And these requirements are so specific that they literally tell you what fees you have to list, or even if you don't charge that fee.
And then the other thing is you have to list the absolute maximum that fee could be, which is also misleading because that's probably, in many cases, very, very unlikely. And then there's another thing in here under the Truth in Lending Act. And if it's a typical prepaid card, they have to wait 30 days before offering overdraft protection, which is a credit product. And the verbiage from PayPal says the decision to obtain digital wallet from the decision to obtain a credit card is senseless, and because the consumer already has the credit card.
Hang on again, just because you're going a little too fast for me. So the thing about having to wait 30 days to apply, walk me through that one more time, please.
All right, if you have a typical prepaid card, the issuer has to wait 30 days before contacting you to see if you'd like overdraft protection, which is a form of credit. But that doesn't make any sense applied to PayPal is what they're saying. And then they finally, I think this is pretty interesting, it says it's forcing them to violate the First Amendment by requiring PayPal to make false statements, by fitting this into this rigid, I think that's a little bit of an extreme argument, but it sounds
That sounds like Dershowitz saying Trump can do anything he wants to do.
Right. Yeah, I'm all of a sudden my Dershowitz.
It's a different panel.
Well, I will. That opens up a number of different questions. So, as we talked about earlier about the definition and the scope of the rule, and what products are covered and are not covered, I do think it merits a conversation about, well, if there are products that look and feel like the products that are covered, but they're not regulated by the prepaid rule, and we'll just throw out checklist checking or any other similar kinds of accounts, and those accounts, checklist checking accounts, are the accounts not regulated by the rule, can offer overdraft and offer a credit card provided by the same provider, just to be clear. How does that impact competition in the marketplace if PayPal and others that are covered by this rule have to follow all of these requirements? And as we just discussed, they're pretty rigid. So I'll throw it to Moshe at the end, and then Eric, if that's possible.
Yeah, I think it's for us it's a deposit vehicle. We view it as similar products, and obviously it creates an unfair competition to bigger guys have more money to sue the government or to find a new creative way to go around the rules. They have a competitive advantage. So startups that once if you pick the prepaid route, you're stuck with this, and it's very expensive to start to switch out, and you're stuck with a certain set of rules, even though the service you provide is materially the same.
If PayPal wins and they relax the rules, not eliminating them entirely, but giving a little more flexibility on the disclosures, that could benefit everybody. What do you think?
Except for consumers.
Eric, can you talk a little bit about? Please.
Benefit consumers.
Sure. So, Megan, so the idea behind the rigid disclosure, which is sort of a conscious decision, is that a couple of things. One is that it's consistent from one product to the next. So you go to your PayPal account, you get a Venmo account, or you go to get a Square Cash account, or a Green Dot GPR card, you're going to see the same disclosure, sort of like you do with the Schumer box. So there's different credit cards with different fee structures. They're all giving you the same disclosure. And the other side of it is the more leeway you give people to call fees different things or take things off the disclosure, the more likely you are to have people trying to evade the rule and charge fees that, well, this doesn't technically meet what they say we have to disclose, so we can charge this fee and sort of hide it from consumers. Remember, one of the things the CFPB was created to do is sort of prevent evasion and people taking advantage of the rules to offer consumers products that aren't clearly disclosed up front. And whenever the trade-off with that, obviously, when you have a rigid system, is that every product might not appear the same way on that, it might not disclose that thing the same way. You see that all the time with different loan products that have to give a TILA disclosure, but the TILA disclosure doesn't always make sense for that particular loan. And, we've been doing that for 50 years. It's not all that different. And the issue, PayPal's issue with the credit feature is a little bit different because PayPal allows you to link a credit card. And if that credit card issuer is a business partner of PayPal, they do have to wait 30 days. The idea is you should not acquire one of these accounts and be presented with a credit option right away. The idea is you want an account to store your money, that's fine. Let them market the credit product.
That's really what that means. If you open a PayPal account now, you cannot link a credit card.
You can link most credit cards, just not one that's a business partner of PayPal. The idea is,
How
Why-
are the
why is
consumer
that?
supposed to know?
well, no, we won't let you do it, I guess. The idea is you don't want people to tie credit products to a prepaid account. And if as a business partner, speaking generally, not specific to PayPal, generally if your business partner is giving a line of credit, it's not, the original thought was, well, prepaid card issuer is not doing it, you're fine. But then they could very easily have a business partnership with someone else offering the line of credit, and you're back to square one.
But
where
they
people
already
are-
have the card. It's
So
not
I'm
a
going to
new
jump in
credit.
at the time. I'm going to jump in. You're representing PayPal. I'm going to speak as if I represent the bureau for 2 seconds. Was the thinking behind the limits? There are limits on overdraft associated with a prepaid account. Was the thinking that in order to prevent people from circumventing those overdraft rules, we have to have these restrictions on the credit?
And that's the
side?
short answer, yes,
Yes.
to prevent evasion.
And so the real question comes in after that is, if the credit product, even if you wait the 30 days, and the credit product you do link to that account is regulated already, what's the real issue then? Because whether I provide a credit card or a third party provides it or a fourth
I
party,
don't think there's any, with PayPal, I don't think there's any issue at that point to link your credit card and use it like you would any other account.
Wait, I can't hear you.
Sorry, no, I'm saying, I think once,
It sounded important.
no, it's not that important. I think, once you link link your credit card to your PayPal account, then there's really no issue. It's really, I think their concern, I don't want to speak for them, I think their concern really is that 30-day, for certain credit cards, there's that waiting period. And I would note that PayPal raised this issue with the Bureau, I don't know, remember, I might get my years confused. And the Bureau did make an adjustment. I think PayPal's concern is the Bureau didn't go far enough and solve all of PayPal's problems. So it wasn't as if the Bureau turned a deaf ear to this. They did fix the rule. I think PayPal thinks the Bureau didn't go far enough.
Like, who are their partners? What's an example
Yeah,
of when you
Deb,
can't
lean
link?
in, please.
What's an example of when that you can't link?
I don't know who their partners are, so I couldn't tell you.
It doesn't make any sense that if I've already had the card, I can see making a prohibition if I'm just now applying for it, like PayPal has a loan product, I forget what it's called. But this is a card you already have in my wallet, I can't link it.
You can after 30 days. The idea,
What gives you the 30 days? What's the advantage of the 30 days?
the idea, generally speaking, not specific to PayPal, is that you're not marketing a credit product and a payment product at the same time. That if I want,
But the credit product is going to be regulated as credit product.
And they already had it.
So
They
what's the
weren't marketing
problem?
because the idea,
This is going to be regulated as credit product.
If you
and
look-
this is going to be regulated as a
Sure.
debit product.
if you step back, in the backdrop of overdraft, so everyone is marketed free checking account, which is great. I sign up for free checking. Little do I know, I quickly overdraft, and then I'm $100 in the hole because I bought 3 coffees at Starbucks. And the idea is the disclosures there.
No, you did something you shouldn't do.
Well, why shouldn't I?
You overdraft the account.
Mhm. And that's what the Bureau was trying to stop here, is from people getting a payment product very quickly digging themselves a hole. Just remember, a lot of people get prepaid cards because they can't get a checking account because they've overdrafted too much. And the idea was, well, let's keep this a safe space for people getting a payment account. Now, if anyone wants to roll out a bank account and offer overdraft, the rules there haven't changed. It's really specific to things that meet this definition.
They were
So-
trying to
so
prevent
what-
people from falling into overdraft kind of unknowingly.
I know, so they don't know what they do.
Yeah.
Okay, gotcha.
There were some
This is so
pretty
different.
bad,
Oh, I know.
horror stories about people who, suddenly had $60 of fees for a $2, cup of coffee. I agree.
But PayPal, the concept of
The banks are
overdraft doesn't
charging
make sense.
$35 for overdraft.
But 2 coffees at Starbucks is $60. So.
Can I ask a question though?
Please.
Isn't this, so much of this about the line between e-wallets? Let's go back to e-wallets because that's really why I'm here. And the e-wallet product, I thought in order to be covered, it had to hold money.
Yes, it does.
And I thought that the complaint made it sound like, well, even if it maybe could hold money, it's still going to be
Capable of holding funds. So you can, a lot of people use their PayPal account and just as a pass-through.
Pass through. Yeah.
But because you may do that, but if I send you money to PayPal, it will sit in your account.
There are
so.
4 that hold money: Apple Pay Cash, PayPal, Square Cash, and Venmo. The other ones like Apple Pay, Facebook Messenger, Zelle, the money just goes right through. It doesn't ever stay. You can't hold it.
Or they just hold the credentials for a credit card.
Yeah.
Sorry, the
It's
question.
different.
Yeah, thank you. So what's the position of the consumer, actually? So this discussion was really CFPB PayPal, but what's the voice of the customer? I mean, what do they want?
I mean, that's a fair question. I don't know if any of us can speak.
I have an answer.
Yeah.
The consumer wants everything free.
I'm not aware, we were just talking about this before, I'm not aware of any statements or positions or any kind of public-facing announcement about the lawsuit from any consumer group. I do know, I believe, maybe, I know last week there was a hearing in the House Financial Services Committee. They had a task force on financial technology where PayPal testified. I don't think they discussed the lawsuit in their testimony. I know Consumers Union testified, but they didn't. I don't think they went to the heart of the lawsuit. They had just talked about some of the technology and the account structures. But I have not seen any consumer groups come up and say we have a position here or that we have concerns. It's something we have been watching for, but we're still waiting.
And just this anecdotal complaints to PayPal by the consumers, seeing these disclosures, being confused and saying, this is an anti-consumer move on your part, so they're pissed off at PayPal because of the rule.
Now, I will say this leads to, in my mind, an obvious discussion about what happens if the rule gets struck down. But before that happens, I do think we need to talk about what are the possible responses from the CFPB. We're still waiting on that, and my understanding is that the CFPB, I believe, has until the 22nd or the 24th of this month. That's a Friday and a Monday. I always forget how that falls with court responses. But that's going to be important to figure out what position the CFPB has taken, because in SELA law versus the CFPB, where they're challenging the constitutionality of the Bureau itself, we live in a world now, the agency has said that they believe that they are unconstitutional. So I think Director Kraninger has sent a letter to Congress outlining that position. So that opens the door to anything is possible in terms of their response. You might naturally think the agency would defend their rule,
Not
but
with Trump appointees at the head of it.
Say that again.
Yes.
I said not with Trump appointees at the head of it. A lot of his appointees are doing away with the agencies they're heading up.
So they'll say, oh yeah, we'll just do away with it.
well, that's a possible response. I guess if this were 10 years ago or 15 or 20 years ago, I think that the odds were that the agency would defend their rule even if the current administration didn't draft it themselves. But now there is the possibility of the Bureau could agree in part. They could defend their rule in whole. But I think there are a lot of options out there in terms of the arguments that PayPal has laid out in terms of the Bureau's possible response.
So, I mean, I obviously have no idea what the Bureau will do. I think there's parts of this lawsuit that get to their fundamental rule writing authority. For example, whether it violates the First Amendment to mandate disclosures on a consumer product. I would imagine they'll defend that claim. But there is precedent, to your point. The Bureau was sued 2 years ago to block its rule on payday lending, and the Bureau agreed to basically redo the rule in response to that lawsuit. So I don't think they're going to do that here. I don't really know what their intention is, but on one hand, I think they need to defend the rule writing process because it's the same process they use on a lot of rules, and some of what PayPal gets at is broader than just this conversation about prepaid cards and mobile wallets.
Does the rule writing process, making process, does that extend broader to the CFPB?
I mean, the First Amendment claim definitely is not unique to the CFPB.
Well, that's enormous.
Yeah. And they make claims specific to prepaid that the rule violates their commercial speech rights. But I mean, generally the process the Bureau uses is the same process the Federal Reserve used before to, the reason the rule went from 700 pages to 1,500 pages is because there's 800 pages of responding to comments from Brian's organization.
They were written by Judy, so.
So, I mean, the Bureau painstakingly went through and responded, including PayPal wrote a comment letter that the Bureau addressed all these concerns. And PayPal might not like the outcome, but certainly were addressed.
Well, let me just ask a commercial question then. PayPal's objecting to it, but commercially, what is their concern? Since they are a public company, they report quarterly earnings, they wouldn't be contesting this. They wouldn't be contesting this if they didn't think it hurt them somehow.
But they think it's confusing.
How does that hurt them?
It could piss off their customers.
I'll go
The
please,
fees,
go ahead.
are the fees explained when you sign up an account?
So there's two disclosures you get. This one is the mandated, you have the better picture of it, is the mandated disclosure called the short form.
Yeah.
And then that's very mandated. Then next you get a second one, which is called the long form, but in PayPal's case is actually much shorter because it just lists the actual fees and then it has an explanatory box. We should have brought it with us. Next to it that sort of explains, well, yes, it says $4.95 for a cash reload, but you're only going to pay that in these circumstances.
So actually, as a consumer of PayPal using it, I was sending a transfer to a freelancer of mine, and I thought I paid them the full amount. And then they told me actually there was a few, there's fees taken out of it. They didn't get the full
You
amount.
probably used the credit card to load your PayPal.
But they didn't tell me the fees, which I was like, would think that if I'm, being CFPB, that they should tell you,
It should be
disclose these
more
fees,
useful if they
that I'm
did it
gonna get
right
less
when
that.
we-
I'm sorry, so what, sorry, go ahead.
20 pages of fees that say 00 because they're not relevant because the rule is too prescriptive.
Right,
But the fee that should have been disclosed isn't.
right,
So-
that's the one
It
that
should have been
actually
when we
been,
were doing the transaction.
exactly, yeah.
I would be upfront and say, as a public matter, we have taken a position that mirrors some of PayPal's complaints as an organization. One, we do have concerns and raise concerns, and Eric's right, part of those 500 pages are probably in response to some of our comments. In terms of, we have always believed that 3 disclosures can be confusing. Initially, and Eric will probably dispute this, again, our traveling roadshow, but initially when the Bureau first came out with their proposed rule, there was some testing done that ended up saying, and I don't know the right phrasing or words that they used, but that 3 disclosures could possibly, I think the long form might be, I forget which form it was specifically, but there was some confusion there. They went back and retested and came out with different results. But
Tested on whom?
I don't know, I wasn't part of the process.
People in Kansas City.
I mean, on consumers?
Yes, on consumers, yes.
We went to Kansas City.
And I'm not challenging the
Iowa.
Bureau's testing in this area. Well, if it was Iowa, we'd still be waiting for the results. But,
By the way, I'm from Kansas City.
well, congratulations on your Super Bowl. I think from our perspective, the 3 disclosures can be confusing, and there are requirements in certain products that are state and local requirements. So you could possibly have 4 and 5 disclosures in some situations, and we don't think that's helpful. We do think that, from our view, that if there was some streamlining, maybe removing the long form, which we feel is clear, similar to the terms and conditions, that might be helpful. But we're open to having a conversation of what's best for the consumer.
What Venmo
Oh,
put
please
on
go
there,
ahead.
so they put this before the prescribed box. It says Venmo has no monthly or annual fees. To me, that is clear. And why not just say these are the only fees we have instead of listing all these fees 0000? Is that a
Yes,
possible
yeah.
response
Sorry.
that they could
No,
modify
please.
it?
Yeah, for me it looks like I'm more product management side, so for me it looks like just user experience thing, and the whole fighting is about like conversion and losing clients because of this huge disclosures.
Well, I was going to get there a little
It's
bit,
very
which is,
usually
oh,
IT
please, go
companies
ahead.
are very good in dealing with that, so
It's like abandonment.
I think it's a very
You might
good point.
restate the question,
Yeah.
because you have a microphone and we don't have one in the audience.
I'm sorry.
I think
Yeah.
raised Alexei? Yeah. Raised a very good point from a product management perspective and user experience. We all offering banking basic deposit vehicles, and if you heard this experience, and part of the things that challenger banks are trying to do is to improve the experience, and they brag about how great their experience is. And on the flip side, if you use a prepaid device, you get this short form notice in front of you when you log into the site or etc. So that hurts the customer experience. I understand the PayPal point of view. If it's free, it's free. You shouldn't have go through 3 pages to tell you that it's free.
Well, I think from our members, we hear that obviously the 3 disclosures can, if you live in a world and you're trying to reach millennials, and these products are not just used by the underserved or unbanked or underbanked, they're used by a wide range of people, and there's a wide range of people who use PayPal and other products. And if we live in a world where we're doing everything on our phone or online, and you have to sit there and click, 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 some people are just going to walk away and say, I'm going to go use this product over here, that they don't have to click, click, click. They can just sign up.
Each click decrease the conversion like 20%, so it
Correct.
means that they're losing potentially 20% new clients because of this thing. So
I think that's the larger point. We do want to talk about competition because I do think this rule has an impact on the market and how people interact with their products and how they pay for things. And I do think that is something that can't be overlooked. But yes.
Maybe this is a question more from Wishy. So if you were going to create a startup where you didn't have to worry about this rule, but could still offer a similar product, how would you do it?
Oh.
I didn't have to worry about the rule. Yeah, so disclosures are extremely important for us, and make sure with the customer engagement, the customer knows exactly what he's getting and what he's paying for. It's improved the customer experience. It reduces our customer service calls. So overall, it's a better experience to do it, but we will do it in the way we choose to do. For us, the instruction to be, you have to disclose your fees, it's enough. We don't need a directory how to do it. So from our perspective, again, it's in our interest to disclose our fee, because otherwise, I don't know if you know, our industry is about cents. We make money, we make cents, we don't make dollars. It's not like pay the lenders. We're making really fractions of cents here in this industry. And for us, customer service cost is extremely expensive. For losing customers, okay, they move. If they don't like you, they move in a second, in a heartbeat. They don't need to take a new mortgage. They just close the account or just drop the card. So it took us so long to get this customer. And then if we don't disclose, and if we don't do the right job in supporting them, they'll just walk somewhere else. So we have enough a big enough stick on us. We don't need additional stick.
I think one-time use cards could work. Like one-time use cards are actually not covered under this, right? Because they're not technically reloadable. So if you're using a one-time use card that's loaded by whatever, ACH or crypto balance or something else that's regulated in some other environment, you're issuing one-time use cards every time you use it. I think that would get around it.
Because every
But
transaction
one-time
is a
use
one-time
card
use.
usually
Right.
address the PayPal or the Venmo question, would it?
You
Because
created a
you're
new
holding-
card
you're
every time you
holding
needed to
balance.
load the money.
Well, I mean, the biggest competitor to Venmo and PayPal in the marketplace are the challenger banks online, you know, the N26s
Revolut.
and other Revolut that are offering a very similar product. They're called a bank. They're not subject
Yes.
to the.
Why is that?
Excuse me.
Yes.
Just a disclaimer. We can compare Venmo, PayPal, with Revolut at 26 with the West. First of all, Revolut is a launch.
Fair enough.
26, everything that is in the media, take a look at the number, there are other numbers behind it. So it's totally, it's like you're talking about something like a one card on the side versus a mammoth, which is PayPal and Venmo, which are numbers and real clients.
And I
So
think
yes.
everybody
What?
who uses PayPal
That's what I'm
has a
saying.
bank account,
Exactly what I'm saying.
almost by definition. I guess you can load it with a prepaid card thing.
If you look at where some of the mobile wallets are moving, they want to be your primary account. Square, for example, wants to get your direct deposit into your Square Cash account, and then at that point, then you really don't need a bank account. And you really, there's no real reason why you shouldn't have the same protections on that account that you do.
Then it should be regulated like
As a bank account.
And
That's
they
what
can
I'm saying
all-
from the beginning.
Yeah.
It
Is
is a
there
bank
a
account.
question down here?
Yeah, I just think there's a certain amount of cynicism in place here, because there are charges that just pop up from the banks historically. And so, because people have been surprised by charges historically, it's better to actually be told that they're not being charged already than to actually say, well, here's a new disclosure, when you can actually say, okay, it's zero. Is that really what the issue here is?
I mean, I would say that's a fair point. I don't want to say that PayPal consumers are mistaken, but if you're getting told the fee is zero, I don't quite see
Yeah.
how confusing that is.
I'd rather be told it's zero than be surprised later on about a disclosure that I've never heard of before.
Well, I do want to make it clear, I don't think anyone up here is arguing there shouldn't be any disclosures or that they should be misleading disclosures. We think that, at least from our view, I can speak for myself here, that the disclosures or the disclosure kind of regime they have today, we think, as we just discussed, can be confusing if you're not charging certain products. I don't think anyone's saying there shouldn't be disclosures, but I do think you're correct. If you're not charging it, I mean, there should be a better way to say that, or at least communicate that to the consumer. I think what the larger question is getting out, for particular companies is that we're seeing the marketplace change. And someone asked if you were creating an account today, what kind of account would you create? And I think the issue is who's regulated and who's not. As we talked about at the beginning of the conversation, and please anyone feel free to jump in here, is that if you have an account that looks and feels like a covered account under the rule, but you're on the other side of the line, it does give you, I think, some advantages, at least at bringing the product to market. You don't have to do the 3 disclosures if you're across the line. you are able to provide overdraft as a feature and credit provided by the same issuer quickly. You don't have to wait the 30 days. We now live in a world where if you're going to go check out and buy something, there are point of sale lenders who you can, basically in a click of a few buttons while you're in line, get a loan and pay for things. The rule seems a little antiquated that you have to wait 30 days to link credit.
Yeah.
How do you compete in that world is the larger question.
I'm curious about, there's this flow chart they have, prepaid coverage chart. Why did they leave out HSA accounts, healthcare savings accounts, and government benefit cards, and military cards?
Certain government benefit cards are kept out by Congress. Not a choice of the Bureau. Needs tested benefit cards were excluded in the mid-90s by
Payroll cards.
Payroll cards are
Payroll
covered.
Does that include at the state level?
I'm sorry?
State needs tested benefits cards are out. Congress carved them out. In the mid-90s, the Federal Reserve tried to cover them, but the states were successful in lobbying that they were out.
Payroll cards were like overregulated like 3 years ago, right?
In 2006, they were brought in.
Yes. So back to the case, if the Bureau does, let's say hypothetically, and I don't know if anyone's familiar with Judge Leon, maybe Eric is, but Judge Leon in Washington D.C.
Tell us, who is this guy?
Judge Leon is the same judge that oversaw the Durbin case when it was filed, when there was a challenge to the Federal Reserve's rules on energy.
And the banks lost, right?
Well, initially, and then
The government lost.
the government, yes, the banks.
Well, they had to just lower it a little
And
bit.
to rewrite the rule, which
Yes.
is the same thing that PayPal was
Yeah.
asking.
But they didn't get rid of it.
Y'all know what the Durbin Amendment, everyone knows that?
Everyone is familiar with the Durbin Amendment and regulations on interchange.
The Durbin Amendment put a cap on what is sometimes referred to as swipe fees, which is the amount that a merchant pays when accepting a payment card.
But just for debit.
For debit cards.
Yes.
Yeah,
And
they
the
dramatically
Durbin Amendment
lowered
capped
it
it for
in
debit
those
cards
cases.
only, with certain restrictions. If a bank was below a certain size.
Over 10 million.
And obviously, that's a very different issue for me. I actually went looking at some of Judge Leon's cases last night on rulemaking, and he definitely he goes in both directions on reviewing agency rules. So it'll be interesting to
He
see.
might go more for the compromise. Seems like.
But he has, I think through the interchange case, he has shown a willingness to strike down some of these rules. And so I do think we have to keep that in mind, that again, there's a couple of known unknowns, I guess, is that we don't understand we don't know where the Bureau is going to come from, and then we don't know what Judge Leon's response will be. So I think there's a lot of factors in place, and so we don't know what's going to happen. But to throw out to the panel, hypothetically, if the rule does get struck down, and I'll start with Deb here, since she's stepping in PayPal's shoes. What should regulation? How do you regulate a mobile wallet? How should a wallet be regulated? I think that's a big question. And should there be one rule for everybody, or should there just be different silos for different products?
I think, I forget who said it before, I think you said it, fees should be disclosed, but you don't have to be so prescriptive. As long as you list what types of fees have to be disclosed, and then we just disclose the fees we have, and it doesn't have to be in a box. But I still cannot make sense of the 30-day prohibition of linking a credit card that I already have. So I'm not applying for credit, I'm just linking a card, so I think that should be linked up.
I have a question
please.
about that, which is that, suing the CFPB seems like kind of a bold move. Do we have any sense of whether PayPal was more upset about the disclosure requirements, or whether they were more upset about, linking an existing credit product and, the impact that might have on?
Probably the latter, I would imagine.
But I couldn't tell from what I read.
I don't know, but please. Yeah.
No, but could we go back to your question? How should they be regulated? Should they be in one basket? Should they be in the separate? I think it's a really interesting question. So before you get to some more of the specifics, I'd really like to hear some answers to that. Creatively.
Yeah, I'm not a regulator by no means, but
But you're a participant.
But as a participant, yes, I think they should regulate based on the merit of the product. If the product does the same thing, it should be regulated the same. We don't need additional regulation and more rules and more 1,600 pages to read. Even though we can pay for the words. No, we don't pay for words. So we want to have a merit-based rule system. So disclosures and regulations, whatever apply to a regular deposit vehicle, should be across the board. Makes everything simple, makes it easy for fintech companies to innovate because we just understand this is a credit product, this is a debit product, this is a saving product, and this is regulated under this, and this is this. Simple. And the minute you start to slice and dice it, the industry comes with new products every 6 months. The regulators are trying to catch up every 3-4 years. And that creates all of this friction. We don't need that quick friction because banking, I've been banking for 30 years, banking is simple. It's debit, it's credit, and it's saving. It's that simple.
So yeah, I think I agree with a lot of what you said. If I were king of the world for a day, I probably wouldn't work on prepaid rules. But if I were, I would agree.
How would you get paid?
If I'm king, I wouldn't have to worry about it. But no, seriously, I honestly don't think there should be separate rules for different types of accounts. If we were writing on a clean slate and you could get rid of, we didn't really talk about sort of the history underlying the rules for bank accounts and why overdraft evolved the way it did. It's a historical anachronism that you can get credit from your bank and it's not called credit, it's called something overdraft. It doesn't really make a lot of sense to me and it costs consumers a heck of a lot of money. So I would eliminate it entirely and let people get credit if they need credit.
You would eliminate the 30 day.
I would eliminate overdraft.
Oh.
The 30-day wouldn't be an issue in that world in the same
Eliminate
way.
overdraft, so people could never overdraw their check.
They could get a line of credit if they needed to.
Just
And then I would mandate, I do think there is a benefit to having consistent disclosures across products. If you allow people to call the same fee different things on different forms, consumers are going to be hopelessly confused. If you see the same, it says monthly fee on every single product, you're going to get trained like you are with the Schumer box to recognize the same things over and over.
Does everyone know what the Schumer box is?
It's this kind of box.
No, I'm asking people here, not asking you.
Does everyone know the Schumer box? Anyone
It's
not
on
know what the Schumer
It's on your credit card statement and your mortgage statement. It looks like this.
So this is a regulation that said, there's a clear box that says, if you pay your minimum payment only, it will take you a gazillion years to pay off your debt.
And you
can argue that's just as confusing as this, but I think people recognize and have learned to see that thing and there's some repetition. And the idea is if you let this rule evolve, and maybe, one thing I didn't point out, two things about the rule. One is the Bureau is required after 5 years to assess the impact of the rule and if necessary make changes. So the Bureau is just in the process of doing that with 2 other rules around remittance transfers and around the qualified mortgage rule for mortgages. And so the Bureau's got a process for reevaluating its impact and whether it needs to recalibrate. PayPal here has kind of jumped the gun. And the second thing I would say, the Bureau's got a process where you can seek an exception to the rule through a trial disclosure or a sandbox. So PayPal, I don't know if they did or not, they could have approached the Bureau and said, hey, we don't think this is working, but like to do a trial of a different form. And the Bureau very well may well have allowed them to do that.
You don't know, PayPal tried to.
I have a question down here, please.
Yeah, so in all these regulations, how do they define what a mobile wallet is? Because I keep hearing it's tied to a mobile wallet. So there are applications, there are mobile wallets, there are, is it when it's a cash account that this applies to, or? Like
There is some
mobile
discussion
wallet?
if you're simply holding credentials.
So if I load a credit card into a mobile wallet, this doesn't.
That simple act doesn't necessarily trigger.
But if I offer within my mobile wallet some sort of specific defined product, which is.
One way to think about it, if you have an iPhone, you have Apple Pay, and you load your Chase card into your Apple Pay, that's not covered.
Right.
But within Apple Pay, there's an Apple Pay cash feature where I can send you cash.
You're holding
That's
out
covered.
tied back to cash.
The ability to store funds.
That someone other than a bank provides.
I'm sorry, say that again?
Well, a bank can issue a prepaid card. It's not exclusively.
It's any account
It's
that
a
holds
deposit
money.
account.
So if I get a Chase prepaid or payroll card, that would be subject to the rule.
If it's a non-GPR storage.
Oh, no, I'm sorry, just to make sure. Please go.
So if it's a non-GPR card with stores promotional funds, for example,
If it's cash, you can use like a Visa or MasterCard
Yeah,
branded, it probably is covered by the rule.
But not if it's like a Macy's.
If it's reloadable.
If it's not reloadable by the consumer, but
By someone
the
else,
program
then it
manager.
generally would be, like a payroll card is not always reloadable by a consumer, but it's reloadable by a third
So
party.
that would be.
That's covered by the rules, yes.
But I'm
But
talking about
you
gift
just
cards.
mentioned incentive and reward, that's a different.
Yeah.
Yes.
Okay.
It's funded by somebody else.
Like a rebate.
Let's look at the definition.
So if I had a
of it.
rebate.
I apologize not bringing it
Okay.
You have the.
But Eric brings up a good point in that some of these products that the wallets who may not be covered here, a lot of these wallets still have they have a card linked to them in order to get the money out of them. And then that potentially could be covered by the rule depending on the product. But I do have a question here.
Yeah, I can't get away from this 700 pages, 1,600 pages.
We'll blame it.
And by the way, you do pay by the word because you're paying your lawyer to go through that.
The rule itself is only 25 pages. The rest is answering.
Oh.
I've sent him
But
multiple
I'm
comments.
wondering when something gets that lengthy and there are multiple sets on different parts, one, how does a consumer ever really know what their protections are, product to product? One piece of this. Two, what does this do to startups and new competition? Because it's very expensive to go through all those rules. And three, doesn't this multiply the opportunity for inadvertently crossing one or more of these laws or rules and open again for more lawsuits? I've seen it in other industries, for example, the EPA, water and air, and then worker protection rules sometimes conflicted, so a company is caught because they're going to follow one law and violate another. And I'm just wondering, in this industry, is that also happening?
Oh, I'll start and please jump in.
A
One,
little complicated question, but.
I think the rules designed to give comfort to consumers that the product's regulated. And hopefully, I would get into the position of, for my organization, we think there should be competition and that we should all be regulated in a way that allows everyone to compete. We want to make sure that consumers have some comfort, that they have questions, they can address them to their issuer provider. But I think the goal should be that the consumer has the ability to make a decision, make an informed decision, and we support that.
What you're talking about does apply not for prepaid, but for banking charters, because there's 3 different authorities that regulate banks. And in some cases, the banks will shop around to their friendliest regulator. And then the OCC, who are the other two?
Federal Reserve.
And FDIC. Or even the state of Utah, you can get a Utah industrial bank charter or something.
But then I to go to your second question in terms of the startups, I'm not sure what startups are thinking. They're focused on their product. We do talk to a number of different companies at various different stages, and I'm not sure that everyone's aware of these rules. So whatever product that you're putting out in the market, you should figure out what the regulations which apply, but they can be confusing if you're trying to looking for a bright line or an easy to understand test. It's not necessarily always easy to find.
I can just think of what the cost of
Correct.
having your law firm go through the rules are.
But that speaks to the barrier of entry, right? If you're going to get into the marketplace, and now you have to make an investment into whatever regulations you're going to do to make sure that the product that you're primarily focused on can get to market.
Eric can help them.
Yes, yes.
I'll tell you that.
Eric, Judy, and all the other attorneys are here, but I think that's an important question because if we're all talking about, everyone always talks about competition, but not everyone can get to the marketplace just because it is very expensive to comply. And then the third part, I think in the long run, I think this is all competition at some point. And I do think this question hasn't been answered yet. How should we regulate this market? Because it can be confusing, and this brings up a discussion that hopefully we can get into is the e-money licenses in Europe or in the UK. It's a lot simpler than having these silos over here, especially since a lot of these products behind the curtain, they're almost indistinguishable, and to the consumer they are indistinguishable. It's just a card or an access device.
And one other point I'd throw out is I heard this and I've forgotten most of my accounting. That was not my favorite course in school. But that accounting in the U.S. is very minutia and rules driven, which allows for people to find ways around it to be technically in compliance, but not in the spirit of it. Whereas there are other parts of the world where accounting is more principles driven, such as you must fairly and accurately represent whatever. And so that then comes down to more the opinion of who's ever opining on the complaint. And that's a point I think we're talking about a little bit here, because The US is very much into the lots of specifics and rules, which then bring you to the point of arguing about minutia. Now, Judy, I think, would have to have worked either case, because they'd have to apply.
But I do think, oh, please.
Yeah, I was just saying, I think, no, go ahead.
Yeah, no, I have a little bit different perspective because I grew up in Israel, so, and we have the British law and a bunch of other influences, so, and we actually are much more detailed in the way we regulate.
More than here?
Much more.
Oh my God.
So,
So how big would your rule have been?
So it will be much bigger. But it's I think so that doesn't solve the problem, by the way, because people will follow the rules and find ways to within the rule to find creative ways to not to do what they want to do. So that's the nature of some businesses.
Called innovation.
So it doesn't, I don't think it gives it any guarantee that people are not gonna do something that is not intended. So I think that the U.S. has the advantage of actually I think traditionally has a lighter. I'm coming from securities, so a lighter kind of a type of ruling that puts more the onus on the guy who is taking the action, the intent. While in other places it's like what you do by the book. So I think in the last 20 years, I see this in my industry now, we're getting into this wording every action. That's a slippery slope. I think we should put the onus on the companies, the fintech companies, to be good actors and punish the bad guys. There's bad guys out there, punish them. We have nothing against it. But if you're not disclosing or you're misleading your customers, you should be punished.
And the way that hurts.
The way it hurts, yes, exactly. And for the sake of all of us. But if you are disclosing and your customers are happy, Venmo has a bunch of happy customers. Why would you want to touch this? Okay, PayPal is again, they have a bunch of happy customers. Why do you want to touch this? Do you think they're going to make the customers more happy? No. So I'm not a defender of PayPal or any one of those, but the merit-based system we have here, working. The good companies are good actors. Apple is a good actor. Okay, people will get a product from Apple, and they know that they're getting a good service. And what's the magic there? Who regulated that? I don't know.
This all happened really because of some bad actors who were
Exactly.
preying on those at the bottom of the pyramid who have very little power.
These guys are not here anymore. So I started this industry 20 years ago.
Maybe they're not here because of this rule.
No, I think before that. I think the banks were.
They knew the rule was coming.
I think the banks, the issuing banks, there's people here from issuing banks, they took them out. They rooted them out one by one. It took a little bit of time, but the industry was cleaned up very quickly by the industry because they're hurting each one of us.
So, I mean, I hear what you're saying, but I don't think we've seen that across the landscape of consumer finance. We certainly, before we had a mortgage crisis, which created the CFPB, there were a lot of mortgage rules, and people were finding ways to evade
That's
them.
exactly comes to what I'm saying, is that you had a bunch of rules, and you still had a crisis.
Yeah, nobody went to jail. So
what I'm saying is that the rules themselves don't stop the crisis. You got to punish the guy who was bad guys. So
but that counts.
the guys in mortgage obviously didn't pay the price. So the rules themselves don't stop the bad
We should go
guys.
back to that one.
We should go back to the place where if somebody does something wrong, you should get punished.
The regulations on overdraft and what the Card Act addressed, which was stacking up charges to like maximize blowout the interest that you owed on your credit card balances, those were really bad, and they were doing that to everybody. I don't think that would have been rooted out by itself. It was banks' greed that caused that.
We do have a question.
Yeah, well, I have a question. I'm wondering, like, who was benefited from this regulation, and I have one candidate in mind. So,
Share.
If the regulation covers neobanks or not, because I don't know for sure. Like,
generally, it would not. They'd be under the.
Okay,
existing
so there's the
rules.
candidate. Yeah, so the candidate is probably Chime, because the whole value proposition of Chime is kind of defend people against overdrafts and work for underbanked people, and this is exactly why they basically have 3 billion value and like 5 million clients, and so the whole thing is like make avoid all these overdrafts and kind of make it comfortable.
Well, I mean, you bring up Chime, right?
Yeah.
So in similar situated banks, I've seen offered free overdraft. And you talk about the impact of these rules. and this is we were talking about earlier again about which products are covered and which are not. That's the impact, is that Chime can go out and or a company like Chime can go out and advertise free overdraft. But none of these companies can. And that's clearly a recruiting tool, otherwise they wouldn't be advertising. So, I do think, again, we live in a world where people jump product to product, and like was mentioned, we'll just drop a product or a card and move on. Some of the places they are landing are the neobanks. And so, I'm not here to talk bad about them. It's just a fact. You see it in the marketplace. But at the same time, if you're PayPal, for instance, and you see that they can offer those products and offer those products quickly without waiting 30 days, you have to ask yourself why.
It was just completely different consumer markets, yeah. So it's underbanked people who don't have credit cards, who don't have the ability to open real checking account. And those who has PayPal users, they completely different.
It's a different audience.
Yeah.
Well, I'm not sure that's actually accurate. I think that's kind of a leftover from a previous era. There's data out there and reports from the federal government in different shapes and sizes about the demographics who are using these different products, and not just these products on the prepaid side are not just targeted to the unbanked and underbanked.
But PayPal is not really targeted to that.
I'm not sure about that. I mean, I'm sure there are
There's no way
unbanked
to get the
people.
money in there unless you have a bank account.
Well, that's any account. That's any product in the market. It's not like prepaid cards are giving money away.
You can't put cash in a PayPal account.
You can be sent money from
That's
somebody
true.
else.
Yes,
You
you
can build
see
up a
your
balance very quickly.
So I think these products up and down are being used by a variety of different folks in different demographics. Those making over $100,000 and those not. I don't think that's the issue. I think the issue is really about all of these products across the market are allowing people to get into the system that weren't there before. And younger people are using these products in a different way. What studies will show you is that younger people have traditional bank accounts, they'll have a checking or savings account on top of their PayPal account, on top of their prepaid card, for whatever reason that they've decided. Other questions, or before we continue the conversation? But this has been excellent. So
I got one more
please
question.
continue.
It's about basically in many countries there is sandboxes. It's more about my company. I'm wondering, so PayPal can go to the court. So is there a sandbox or like organizations where like small companies or small wallets can talk with regulator or with somebody who is kind of.
So yeah, that's what I was referencing before. The Bureau CFPB rolled out 3 different innovation policies. Call them. One is allows you to try certain disclosures that are different from what's prescribed in the rule and test them. One is to get an approval that certain practices are permitted under the rule. And the third is basically get an exception to no action letter that something is exempt from the rule. So that's something the Bureau is actively, very heavily pushing small companies in particular, but companies of all sizes to apply for, to try to experiment a little bit. It's hard, I think, for people to conceive of that, but that's certainly something you could see. Brian and I talked about this in the prepaid landscape, but maybe there are better. I'm not denying there may not be better ways to disclose fees regarding a prepaid account. So that'd be a perfect way to test, to say, hey, we've got this new online account, CFPB. Here's why your disclosures don't work. Allow us to do a test. I don't know what they would say. Maybe PayPal asked that. CFPB said no. I don't know.
Then you could publish them maybe to everybody. Say, this company got approved for this kind of disclosure. If you want to follow that, you can follow that.
Yeah, Eric, in the new innovation, do they have any safe harbors for what occurs, for the testing and
so
sandbox?
Generally, each one is a little bit different. The big question is whether you're insulated from a state actor, and I want to get the 3 confused. If you get an approval that something is approved under federal law, the state really can't disagree with that. The no action letters, I think, are a little bit hazier, particularly if it involves an unfair, deceptive practice, because the states have their own authority there. And the trial disclosure Act, frankly, can't remember how that treats, like whether you're insulated from private. You're not insulated from private liability, but all these companies have arbitration clauses. But you may be, I'm not sure if you're insulated from state liability.
We have a few more minutes left. Any other outstanding questions?
Can I make a comment? It was suggested, I think by Moshe, that maybe we don't need the prepaid as a separate category. We should just have credit, debit, and savings. And I'm a believer in the fact that we do need prepaid, and I think, and it is a separate category because of the fact that there's a different level of innovation. The difference between prepaid and regular debit is, are you opening up a bank account somewhere, a full-time bank account? And the beauty of prepaid is that a prepaid account can be held by a licensed non-bank. You don't have to have a bank partner unless you're riding the Visa, MasterCard rails, of course you do. But you can, that's what PayPal can hold your account without being on the Visa, MasterCard rails. And in Europe, and I spent 2 years in Europe, a licensed e-money institution, as Brian mentioned, they can become members of Visa, MasterCard. They've decided it's anti-competitive only to allow banks to become Visa, MasterCard members. In Europe, non-banks who are appropriately licensed can. And I think that's why we're seeing a lot of innovation out of Europe. And I would urge the industry not to drop prepaid and say, well, let's just make it all debit, because I do think it creates innovation, and we've had some really cool, innovative products.
If I'm not mistaken, the Visa and MasterCard, that's their own internal rule about having to be a bank. It's not a regulation.
They were started by banks.
Yeah,
Yes.
it was a self-serving rule.
But that rule used to be around the world.
And then it's starting to
The
change.
European antitrust said, oh, no, that's anti-competitive. You have to allow
That's
other
the
people to.
slowly waning influence of a duopoly.
Yes. So it's from a financial institution perspective, it's a big difference being able to become a member in Europe if you're not a bank, but you have to be a bank here, and you have to partner with the bank. It just changes everything. Our rules are so different. But I still think prepaid has to be there, and I think the CFPB is trying to make room for prepaid in this otherwise bank-controlled area of
The
payments.
guy who holds the money, at the end of the day, is a bank.
No, PayPal. I mean, PayPal is in a bank account, but it's
PayPal's not a bank.
It's in your PayPal account.
But what is it sitting?
PayPal holds.
You can have a
PayPal has a bank though.
They're
Yeah,
not a
so
bank.
they've got to park the money.
So they're
But
part
they
of the
use
bank.
You can be a
So they're
licensed
using a
money
bank.
transfer
My employer has
too.
my paycheck in a bank. They're not a bank, though.
That's true. So the money's in the bank. The money is sitting in the
I will say this, that and, you know, we'll go into the finer parts later, but we do have to wrap up. I do want to thank our host, K&L Gates. I want to thank Judy and her team for putting this together. I do want to thank David with NIPay. This has been fantastic. And I'm going to do a shameless plug for my group, the Innovative Payments Association. We do have a conference in April in Washington, D.C., where we can continue this conversation. And we thank all of you for joining us tonight.
And I'm more shameless than anyone here, so if you thought this was a good event, it will be up on YouTube in 2 or 3 days, probably 2. This has become a really good event, lots of interaction. Please follow us, join, because the events get better the more people who join and talk and ask questions. And thank you very
And
much.
participate in the events committee.
And Judy and K&L Gates for hosting, because without them, these things wouldn't happen. Thank you very much. We got 2 more minutes after
Interesting time around.
Yes, it is.
I need a lawyer.